So strategy number 3 is flips, probably the most exciting strategy and the most Wolf of Wall Street style maybe. Parties at the end, once you've completed, the money's hit your bank, let's go partying. There are some elements for that too, like that I guess, but there's a few things you'll want to know about. It's probably the most common strategy that put property investing on the map for people, especially with the likes of Homes Under the Hammer. So yeah, let's go through it. So for effort I've put a 2 again. That's because I have done a few flips as well. Most commonly you've got to front end it quite a lot. Especially if you're going for planning, but just planning the actual what you're going to do, even if you're not going for an actual planning submission. Planning what you're going to do can be quite lengthy, and you need to put that time in up front to ensure you know exactly what you're going to do, so that any trades can carry out exactly what you wanted to do without having to duplicate or saying, oh, I didn't want that going there, let's move that, yada yada. You want your numbers to be spot on as well. So market analysis and stuff like that can be quite time consuming, and running around the agents and finding a deal that stacks. I'm in the Midlands, Staffordshire. Finding a flip that works round, especially the areas that I look to do my long-term investment and like single lets and stuff like that, they're few and far between in the centres. The rural areas maybe, but you're taking a bit more of a punt as to your end user. The capital required I've put as a 2 again. That's mainly because not so much purchasing the property, because again it's just a 25% deposit typically. You can bridge, there's all these creative ways of doing it, but on the law of averages and to make things simple, you're going to need a 25% deposit of the asset, your purchase price, and then typically you're going to want to fund the refurb. Again, there's ways and means around that, but all you're going to be doing is taking it off your profits. So typically you'll need your 25% deposit and your refurb costs. The experience level that I put for this is a 2. That's mainly because you don't want to be doing a project for the sake of doing a project. You want it to be making you money, and you want your return on investment, whatever percentage that may be. I'd say typically I'd look at somewhere around the 20%, which isn't that high. I know guys look to the 30%, but finding something around here that's going to be doing 20% plus is tricky, and you'll want the experience quite early on to know confidently what it's going to be worth at the end, what that refurb's going to cost, and therefore what you're going to offer. And you only need to be out by a few grand, especially in the area we're in. If you're out by 5-10 grand, you've halved your profits, and it wasn't worth the while. So the positives to doing a flip investment strategy is obviously the large lumps of cash sums when they come in. So you could be looking anywhere, when you're starting out, you could be looking anywhere between 20 to 40% profit dropping in your bank after doing it, which is going to be very appealing compared to a net profit on a single let of 250 quid a month. I must admit, it sounds a lot better, and it is to some extent. Some other positives are you can make stunning looking properties that look great on your portfolio, especially if you're starting out and you're going to be wanting to raise investments further down the line. If you can show a load of stunning projects that here's the before photos, here's the after photos, and they look ace, then that's really going to take you a long way. And the other positive is it's a clean in and out strategy, and to some extent gives you some liquidity, so that you're not stuck in a property. But there are some negatives to that, which I'm going to go on to now. So the negatives is if you've got your numbers wrong, you're going to do a project for free. You're going to do 6 to 12 months worth of stress for absolutely no profits whatsoever if you've got the purchase price slightly wrong, or most importantly the end value slightly wrong, and obviously the refurb slightly wrong. If any of them are out, or they're all out by a little bit, it quickly eats into your profit margins, especially if you don't take into account things such as stamp duty, legal fees buying, legal fees selling, agency fees selling, taxes selling. They soon eat into it. A thing I found with flips that put me off, but I don't know if that was, but I did them quite early days in my property career, and I think that might have something to play with it, is I found it quite stressful, purely because if you've done a bit of a finger in the wind job and you're not guaranteed on what your end, well, you're never going to be guaranteed on what your end value is going to be. But if you're doing it and it's tight and you're not sure on that end value, you're going to be stressed for that whole refurb on every pound you spend. Any little extra, you're going to think, right, okay, well, that's just taking another chunk out of the profits. So my advice would be, if you're going to go into a flip, is you need to make it chunky enough and worth your while, more so just for the stress elements of it, rather than your percentage returns on investment. Flips are something that I'm going to look to go back into because we've got the financial backing now, and we know what we're doing. We'll put in lowball offers, we'll put 20 lowball offers in. We're not bothered if we get them, but if we do get them, brilliant, because we know that property is going to make some good money. Another thing that puts me off flips is being caught in a downward market. What I mean by this is, for example, we're just coming out of the COVID lockdown, imagine, and just after that we'd left the European market. So if you imagine you bought a property at the end of 2019, you've done it up, you've invested all your cash into it, right, let's get the money out. Market downturn happens and you're stuck in that property. You either make a loss, break even, or you sit it out, or in worst case with COVID, I mean, it's an anomaly, but you can't even have a viewing done on that property, and you're sat with your cash parked in there, and that property is actually costing you money to maintain for council tax, insurance, heating, if you've got a heater, electric, etc. And it's all taken off the top line, and it's just a ticking time bomb for you. Another negative to doing flip properties, something that, again, really turns me off them to some extent, although, again, my situation has slightly changed, is the time from putting your offer in and securing that money to that property, the time getting getting the money back out. Loads of people look through it through rose-tinted glasses and think, right, I'll do the refurb in 2 months and hopefully we'll get an offer within 2 weeks. Job done, money's in the bank, and we're happy to go on to the next one. Not gonna happen. You're gonna put your offer in. The conveyancing process should take 8 to 10 weeks. It's going to take 2.5 months, say. Then your builder's not going to turn up when you wanted them to. Or you're going to uncover that it needs a new gas supply. And all this, so your 2-month refurb turns into a 4 to 5 month refurb. Then, okay, yeah, I mean, the two flips I did both had offers accepted within the first week. Brilliant. Problem being then, they're in a chain. They've still got it, they haven't even marketed their property. You end up in a 5-property chain, and what you'd have hoped to have been, in your rose-tinted glasses, a 6-week exit turns into a 6-month exit. It sounds like I'm being dramatic, but I'm really not. What you'd have hoped would have been a 6-month in and out is most probably going to be, best case scenario, 10 months, most likely scenario 12 months, very possibly 18 months. And then if you have some pandemic or economic crisis to play on at the same time, you could be looking at 2 years and your profits will have been wiped out. As we're finishing the flipped investment strategy, I just wanted to reiterate, because I can feel myself sounding slightly negative, not to be negative, it's just to know what you're getting into, because the worst thing you want to do is look at everything. It's like running any business. You don't want to do everything on the best case scenario and it all turns out on the worst case scenario.